I'll have to be honest with you. First thing I'm going to mention right up front is it's free. I like this service when it's free because, you know, you can tie up a lot of money in different services, and from experience I found out that sometimes you can pay a lot of money and you may not be getting that much out of it.
Good afternoon, welcome to GrainTV. My name is Cody Bills, this is Brock Shimano. Today is Friday the 3rd for the weekly wrap-up. Let's turn right over to the trading platform here, see where we closed off the week. Looks like we closed on a positive note here. Corn trading up 3 cents for the March contract. Soybeans up 1 1/4. Wheat in Chicago trading up 8 3/4 cents. And Kansas City wheat trading up 11 1/4 cents. Brock, we did have export sales come out this week. Did they affect the trade on this Friday?
You know, I think initially it did lend a little support to the soybean market. If you take a look at this table here, you can see that soybeans was the only one out of the 3 commodities to actually beat expectations this week, coming in at 943,000 metric tons. Corn missed badly on the downside, coming in at 154,000 metric tons. The lowest end of expectations was 650,000 metric tons, so we missed badly there for corn. And wheat, we came in just about 100,000 metric tons below expectations there, coming in at 248,000 metric tons. You know, looking at next week, we do have the USDA WASDE reports coming out next Friday. If we take a look at where we stand this marketing year for these commodities and in relation to what the USDA is currently projecting, wheat, we're sitting about 89 million bushels ahead of pace, corn about 214 million bushels ahead of pace, and soybeans about 324 million bushels ahead of pace. So all 3 commodities are running well ahead of pace, but I really only anticipate revisions being made to soybeans and corn at this point, since they are so far ahead of pace. You know, Cody, we did get a little bit of buying interest coming into the wheat market, and on the technicals, it looked like a nice little bit of a reversal here today.
Yeah, absolutely. If you take a look at the chart here, you'll notice that we were able to push down below $6, something that we talked about earlier on this week. We were able to push down, but we were unable to close down here. Now, I think wheat has been beat up for quite some time, and I think that the fundamental news right now is the frost freeze threat coming into the winter wheat areas next week. I think that's giving this wheat market enough reason to short cover, and I wouldn't be surprised if we continue a little bit higher here in the earlier part of next week. When I talk about that frost freeze threat, I'm talking about between 15 to 20% of that hard red winter wheat area is in position here to be affected by the cold weather. We could see damage out of it. The bottom line is Nebraska, areas of northern Kansas and northwestern parts of Kansas are all in that kind of area that we could actually see damage out of the weather. So the bottom line here is that I think this is a reason for an oversold market to start covering some of those shorts, and we could see this rally continue a little bit next week.
Yeah, it seemed like a few factors came together today for the wheat market. We did see that technical buying. We see the weather event that should be happening early next week. Came back in. We did see a nice little pop in the market. That was good to see here today. You know, soybeans, a similar story. We did get a little bit of a move higher today on some technical buying. If you take a look at the daily chart here, you can see that we did go down and test that trend line that's sitting right around that 1270 area. Right above us, though, is the at 1275 is the 200-day moving average. That, you know, yesterday in yesterday's action, that did provide a little bit of support on the way down. We blew through it rather quickly, and today we did go back up and test it. We weren't able to mount that and stay above it. So I'm kind of looking at that as a little bit of a role reversal position right now. We'll have to wait to see if we can get above that in the next couple of sessions or so. But as it stands right now, 1275 is sitting right above us at the 200-day moving average.
Yeah, and you know, when you look at this chart, you'll notice that, you know, you have that trend line, you have that moving average, and really when you look at the range that was printed in today's candle, we tried breaking through both of those. You know, we tried testing both of them. We ended up kind of settling down just a small gain on the day. I wouldn't be surprised if we kind of chop around here in the earlier part of next week, but really I think there is significant risk here with the story, the fact that DDGs have been rejected from China, the fact that DDG prices continue to tumble, and the fact that you get meal prices you know, also taking that tumble. I think that that's enough of a fundamental story here to really start taking the wind out of this soybean market, and you know, we could very easily test the lows that we printed earlier on this week, next week when the market opens back up. You know, Brock, other than that, I think that pretty much wraps up the show, and if you have any questions about what we talked about today, give us a call at 877-472-4607. Remember, if you're interested in taking a demo of our mobile trading platform, you can do so at grainhedge.com or give us a call. Thanks a lot for tuning in. We'll see you Monday next week.